Hello everyone, welcome to the TGIF update. Today I want to focus on Bitcoin and some stock indices a little bit. Since the drop last week, the market has entered the fear regions again on the sentiment index, which is understandable. I have seen a lot of 10 to 12Kers come out of the woods on social media again, and a lot of people are expecting lower prices from here. I want to make some technical arguments for the counter case. Let me clean up the chart a little bit, hide these. I'm still in my long, I'm keeping it open. Alright, so first of all, this bullish order block has given us great support. If we check, the 50% retracement into the order block has given us a nice bounce for now, which is bullish. It's normal that after such a retrace, especially such a fast drop, people get fearful, but the technical reaction where it happened in this order block is very telling for now. At the same time, we still have a higher high and a higher low. So if we see a bounce and then roll over and then make a lower low both under this one and even taking out this, and we see like several daily candle closes in this region, okay, then we can talk about a market structure shift to the downside, and we can then start looking for shorts. If you are not already in a short from up here, there is no point in entering a short blindly right where it is right now. First we need to see a technical structure shift before we can turn bearish. And I mean, as I said before, economy wise, I'm definitely a longer term macro bear, but I do not believe that stock prices, stock indices, or even crypto prices reflect the state of the economy. And as traders, we have to trade the charts. We don't trade the economy. We have to keep certain events and economic indicators in mind. I have mentioned these in my educational articles. If you haven't read them, they are on Discord. But ultimately, we have to look at the charts and not let our emotions dictate our decision making. So let's have a look at the S&P500. So I have been talking about the key retracement levels on the Fibonacci retracement tool for a while now, and we are still in this key retracement zone. So from the 61.8% to the 78.6% region, measured from the all-time high to the most recent high time frame low, we are still in retracement, in a key retracement region here. So it's not uncommon at all to see price bouncing around a little bit here, do some consolidation, redistribution, because you have to understand that this rise in the stock market since October last year is significant, and it's normal that we will stall out a little bit here, but for now the focus should be the 61.8% retracement level. As long as that holds, and arguably even the 0.5 to 50% retracement level, the stock market still has a higher probability to go upwards than downwards. So right now it's in the center. When it gets above the 78.6% retracement level, we have a higher likelihood to go to a new all-time high, and if it drops under the 61.8, arguably even the 50% retracement level, we have a higher, statistically higher chance to make a new low. So right now we are kind of in the bullish to neutral territory, but support hasn't even been tested of the 61.8% retracement level. And if we get a retest, I want to see the reaction there. Similar on the NASDAQ. Let me change this one. So we are still well in this key retracement level. Yeah, 61.8% didn't even get a retest right now. So I wouldn't be surprised if we get a little more scare in the market and continue consolidating here for I don't know, maybe a few weeks, a few months before the market is going to make a decision on the direction. The Dow Jones. If you measure it, you will see that it's also in the key retracement zone right now, and everything is holding just fine. We didn't get the 61.8% level retest even yet, so there may be a little more scare here, but ultimately we have to wait for the market to either drop under the 61.8%, and if we really want to get bearish, the 50% retracement level on all of these stock market indices to get bearish. And if we just keep consolidating, everyone will feel extreme fear at the bottom of the range and get very greedy at the top of the range. That's just how market sentiment works. So just be aware of the technical levels and keep a cool hand. And as long as the stock indices hold, I know that Bitcoin is still far from its retracement, but as long as the stock markets can make new all-time highs, and I think there is still a possibility, even though I'm like bearish on a macro level, because there are elections coming up in the United States next year, and politicians may want to have a strong stock market at that point, unless they want to use fear in their campaigns. So the argument, or my outlook for at least the medium term, is still more to the upside. In the longer term, I think all of these stock indices are in the complacency phase of the Wall Street psychological something cycle chart. I think you all saw it. But yeah, in the medium term, I still think there is a good chance that we will hold. And whenever the stock markets enter or are strong or make a new all-time high, usually crypto is tending towards the upside as well. I know there is a certain regulatory unclarity still in the United States, and I think that may be solved during the, or at least promised to be solved during the presidential election campaigns, in order for the politicians to secure more votes from all kinds of crypto enthusiasts and tech enthusiasts, etc. But I still think that if the stock markets just consolidate in their key retracement zones for a few weeks or even months, and then break to the upside and make a new all-time high, Bitcoin will also, at least given its weakness, at least come to these levels, unless we see a new low made on the daily time frame at least, and then we will probably trickle down if something like that happens. But I saw some arguments that retrace down to 10 or 12k would be bullish, and then we will rip from there. I don't believe that would be the case. if we don't get regulatory clarity while this trickle down happens, and then 10 or 12k, the technical levels will mean nothing, because I think if we see such a downtrend, it will be because either there is regulatory FUD, or the US lawmakers will try to squeeze the market liquidity even more before they implement some clear regulations. So the levels I'm watching right now is the order block low, and until that's broken, I remain bullish. And in my long position, and I'm also watching the S&P500, the NAS100, and the Dow Jones Industrial Index, and keep an eye on the key levels on there. And that's all I have for today. The altcoins are doing terrible, at least the ones on my watch list, so there is no point in going through them. And I think the next time I will be trading is Monday. Today is the Jackson Hole in the United States. Both Powell and ECB's Lagarde on separate occasions will give a speech, so expect some volatility in the market later today. And I'll see you again in the next week update.